Welcome everyone, we have a lot to unpack for you today. You can just feel it, right? The markets are completely on edge, really caught in this tug of war between political drama in the US, some seriously divided central banks, and, believe it or not, a historic deal happening on Wall Street. There's a real tension in the air, and we're going to break down exactly what's driving it.
So here's how we're going to tackle this. First, we'll get a feel for the overall market mood, which is pretty much dominated by these shutdown fears. Then we'll dive into the fascinating debates going on inside the Fed and the Bank of Japan. After that, we're going to put the Japanese yen under the microscope. It's at a super critical point. From there, we'll switch gears to a massive buyout that's shaking up the gaming world, and then we'll wrap up by looking at the key data that could really move the needle this week.
Okay, let's get right into it, because the single biggest story casting this huge shadow over Wall Street right now is that potential US government shutdown. And look, this isn't just political noise, it has real effects on things like economic data and just general market confidence.
And this number right here, it tells you everything you need to know about the current vibe. We're looking at a 38 on the Fear and Greed Index, which puts us squarely in fear territory. It's a perfect snapshot of how all that uncertainty in Washington is translating directly into investor anxiety.
And you can already see that caution playing out before the opening bell. The futures for all the big ones, the S&P 500, the NASDAQ, the Dow, are all pointing lower. It's a pretty clear sign that traders are pulling back on risk.
This right here is a textbook flight to safety. When things get uncertain, investors do what they always do. They sell off riskier things like stocks, and they pile into safer assets like US government bonds. And when more people buy bonds, their prices go up and their yields go down, which is exactly what we're seeing here.
Now, it's not just the politicians who are split. The world's two most important central banks, the US Federal Reserve and the Bank of Japan, are also dealing with their own deep internal divisions. And that's just adding another layer of confusion for all of us.
So over in the United States, the Fed is walking this incredible tightrope. Fed Vice Chair Jefferson basically laid it out perfectly. He's seeing risks pulling in totally opposite directions. On one hand, he thinks the job market could get weaker, but at the exact same time, he's worried inflation could stay stubbornly high. Talk about being stuck between a rock and a hard place.
So, with the Fed in this bind, what is the market actually betting on? Well, it's not even close. According to the CME FedWatch tool, there's a 90% probability that the Fed just hits pause at its next meeting. Traders are pretty much saying the Fed is going to wait this one out.
Meanwhile, if you hop halfway around the world, a very similar drama is playing out at the Bank of Japan. You've got the hawks, who are getting louder, with 2 members even voting for a rate hike last time. The market's now giving it a 62% chance of a hike in October. But then you've got the doves, who are urging everyone to slow down and wait for more data before surprising anybody.
All of this back and forth at the central banks is creating some major waves in the currency markets. And honestly, ground zero for all this action is the dollar-yen exchange rate. It has become the pair to watch for anyone trying to guess the next big move.
As we can see from the latest prices, the US dollar is still flexing its muscles. But the Japanese yen has actually managed to fight back a little bit lately, pulling that USD-JPY pair just underneath the huge psychological level of 150. Traders are all trying to get positioned for what could be a long-awaited rate hike from Japan.
And this is where it gets really fascinating. When we peek into the Owanda order book, it's like looking at a battlefield map. There's this massive wall of sell orders sitting between 148.50 and 149, acting like a ceiling. But right below it, there's a super dense floor of buy orders between 147 and 147.50. It is a genuine tug of war.
All right, let's switch gears completely, moving away from all that macro uncertainty, because it turns out that even in a nervous market, the appetite for gigantic deals is still there. In fact, a monster buyout just sent shockwaves through the entire video game industry.
Yeah, that is not a typo. $55 billion. That's what a group of big-time investors has agreed to pay to take the video game publisher Electronic Arts, you know, the company behind games like EA Sports FC, private.
And just to give you an idea of how massive this is, it's not just a big deal for this year. This is the biggest deal of its kind ever. It shatters a record that has been standing for almost 2 decades to become the largest leveraged buyout in history. That's a huge statement about how much value people see in the gaming world.
So who's behind this record smasher? Well, it's a real powerhouse group. It's being led by the private equity tech specialists at Silver Lake, and it's getting major backing from Saudi Arabia's Public Investment Fund, the PIF, and Jared Kushner's Affinity Partners. This is a big move.
So after all that, where do we go from here?
Well, with all this political drama and central bank guesswork, markets are absolutely starving for some clarity, and they might just get some from a whole bunch of key U.S. economic reports that are dropping this week.
Looking at the economic calendar from investing.com, a couple of releases really stand out. At 10 a.m. Eastern Time, we're going to get the latest numbers on consumer confidence and the JOLTS job openings report. These two are going to be really important for getting a fresh read on the health of the American consumer and the job market.
And really, that all leads us to the big question for the week ahead, doesn't it? In a market that's being pulled every which way by politics and central bank drama, is this hard economic data going to be strong enough to finally cut through the noise and give us a clear direction? Or are we just stuck in this state of uncertainty? That's what everyone is wondering. We'll be watching closely. Thanks for watching, and don't forget to like and subscribe.